Good morning, everyone. I'm Charlotte Kanagasabapathy, the Global Fintech Platform Director at Barclays, and I'm delighted to have Adam Jackson, Director of Policy at Innovate Finance, here with me for a fireside chat to talk climate fintech, policy and key enablers to get to net zero. So as a brief introduction to Adam, with 30 years experience in government finance sustainability, Adam leads Innovate Finance's policy and regulatory engagement, representing the fintech sector in the UK. From 2008 to 2013, he was in charge of the UK government policy and programmes for startups, scale-ups and SME finance. And he has also led Grant Thornton's strategy on profits with purpose, Tesco's climate change programme. He was a member of the UK National Advisory Board on impact investing, and has also recently worked with London insurance brokers on net zero. So Adam, thank you so much for joining us this morning.
Not at all. It's great to see you. I'm impressed we've both managed to have real fireplaces for our fireplace chat.
Yeah, we didn't plan that at all, did we, Adam?
I'm slightly embarrassed on a talk about net zero and climate change. You can just about see a wood burning stove in my fireplace, which possibly, well, it certainly isn't net zero.
Well, we'll look over that, because I can see that you have contributed a huge amount to this sector anyway. So I guess to kick us off, climate fintech is financial technology that catalyses decarbonisation, and I guess to set the scene, I thought it would be good to share a few quick data points about climate fintech with our audience that folks might not already know. So there was a great report by New Energy Nexus in 2020 that sort of talks about how 75% of climate fintech companies are actually still early stage, so have raised up to about $10 million US dollars so far. And also pleased to say that Europe is ahead of both the US and China in terms of the number of climate fintech companies that we have here. And so I think, there's been a growing advocacy for a greener economy and the financial system over the past sort of year or so, particularly from leaders like Mark Carney. We've had the Khalifa review that touched on it. Obviously, Rishi Sunak is also kind of weighing in there and making some really positive noises at the moment as we move towards COP26. So from a climate change perspective, Adam, what do you think the world of financial services is really going to look like in, say, 5 years' time?
In order to think about 5 years, I'm just going to sort of reflect on where we've been so far, because I think the change that we're just starting to go through is really important. So up to now, I think the focus has been climate risk and consumers. So thinking about extreme weather, crop failures, catastrophic events, and financial services have priced that into asset values, the risk of extreme weather. And I think also financial service providers have responded to the pull from ethical consumers. But I think things are really shifting now. So, Paris Agreement, government signed up to keeping temperature rises at no more than 2 degrees C by 2050, ideally 1.5 degrees C. Net zero by 2050 to achieve that. But critically, scientists now saying we've got to halve emissions by 2030. So the next, you talk about the climate decade, but we're already 1.5 years into that. So the next 8.5 years, absolutely critical. How do you halve emissions by 2030? It means total transformation of the economy, of business and consumer behaviours. The levers governments have are regulation, investment, tax and advocacy. If all of those are pushed towards low or no carbon businesses, then investors and markets, financial services will follow. They'll disinvest in those whose value is most at risk at future, and then the value of net zero businesses, those that enable transition, will rise. I think also we'll see government incentivizing financial markets and financial services to accelerate that. So we're seeing climate reporting regulation being rolled out in the UK by 2025. All major corporates, financial institutions are going to have to do that. So capital markets are no longer just valuing climate risk, they're valuing the actions needed to achieve net zero. And I think that's the really critical part for financial services. We'll see companies having a legal duty to take action to achieve net zero targets. And that means all lending portfolios, all investment portfolios, all insurance placements, perhaps all payments will need to report on total and individual emissions for scope 1 to 3 and the alignment of those investments, etc., with pathways to achieve net zero. So that means like new measurement systems, new data, kind of new financial values. We'll have a whole system based on emissions as well as pounds, dollars, and critically, I think also alignment with pathways to net zero. Big opportunities there for financial services and data to play in achieving that, but it kind of means redesigning the entire financial system.
So it's an easy task then, no problems. We're halfway there already, maybe not. So I mean, you touched on a lot of different things there, Adam, and actually one of the ones I just wanted to pick up on quickly, what was on the kind of laws and regulations side of the things. So I mean, obviously we live in a democracy, and so you know, Joe blogs and consumers do have a role to play in the making of these laws. And I don't know if you remember, but back in June, there was a kind of interesting example in Switzerland where actually their voters rejected several pretty key, quite obviously sensible, in my opinion, kind of climate measures. And personally, I was surprised because I thought, you know, it's an affluent, well-educated country. Like I would have thought people would feel that they could afford to invest in the future in Switzerland. But so I guess my question is, kind of as an optimist, I do feel like we're at a tipping point, but I'm also a bit wary about whether the general public genuinely has appetite to give this the priority that it needs to have right now, if not kind of yesterday. And as a fintech sector, what should we kind of take away from that?
Yeah, it's interesting. I mean, 15 years ago, I led a kind of big consumer campaign with Tesco around climate change, getting people to start thinking about it then. I'm not sure we've really moved the debate on with consumers that much since then. Every discussion with government and with sustainability managers identifies there's a huge piece around consumer behavioural change. There were surveys recently showing kind of public opinion and actually also complete misunderstanding of where the biggest actions are that can achieve net zero. So I think there's going to be some very difficult conversations with the general public when they realise the impact it will have on them. I think it also means for fintechs that the scale of change required and that governments are driving now, just depending on kind of the ethical consumer, is not enough. It's a nice product to have that responds to that consumer demand, but it's not going to get us to halving emissions by 2030. So I think, you know, we all have a part to play in educating public opinion, but I think also, but maybe the most important thing for financial services and then for fintech, maybe focusing on that kind of debate about risk and opportunity. So really highlighting in terms of your pension, your savings, etc., you know, invest in those with robust, independently verified pathways to net zero by 2030 ideally, or 2050, because those are the assets that are going to retain their value.
Yeah, interesting. And I mean, I guess there doesn't seem to be a lack of appetite from policymakers and regulators to make the kind of changes that are required to help us get there. I mean, there's been a lot of talk about, you know, build back better, particularly through COVID, but I'm sure you must have been kind of part of some interesting conversations there. So is there anything kind of you can tell us about, you know, what's been said that maybe we haven't heard in the news that can help us kind of feel positive about where we're going with this?
I think in terms of, you know, policymakers, probably the most positive thing I take from it is the focus of the financial services regulators. Now, that's not always a positive, and I appreciate some in the audience may find it concerned that the regulator is going to be driving this, but you know, the FCA told me this week, they said, do not underestimate the importance of net zero to us in terms of financial conduct. And they said the centre of gravity will shift in the next 6 months, that we will all be focusing on this. You look at the Mansion House speech by the Chancellor the other week, and the document that came with that, the UK vision of financial services in the city, signed up by Andrew Bailey as Governor of the Bank of England and Nicola Ratti as Chief Executive of the FCA, all focus on green finance. So I think that the driver is there with the regulators. The other bit is every other bit of government is looking at it. So I've actually had kind of a lot more engagement with the Department for International Trade and the UK's trade commissioners in APAC markets in Latin America, where they are really interested in being able to talk about green financial services. And there is real interest in those markets of what the UK can do.
That's fantastic. And so, I mean, you touched a little bit on it, but I wonder if you could talk a little bit more about your thoughts on what types of regulations we're likely to have, and actually to what extent they will have an impact, maybe near term or long term, on fintechs who are trying to kind of scale up quickly, both specific climate fintechs, but also just the fintech sector in general.
Yeah. So I think, some of the regulation will be kind of down the verticals that some fintechs will operate in. So thinking about lending, asset management, insurance, and I think we'll see regulation which increasingly requires reporting disclosure around how those portfolios align with net zero targets and how they demonstrate progress that the overall emissions from that institution, that fintech's portfolio is reducing and hitting net zero. I think there's a big opportunity for reg tech and fintech more generally, of how you as a business, or how you help your clients in financial institutions demonstrate compliance and track data. Because then each business will need to demonstrate its own scope 1 to 3 emissions. And that also means that for any business, and therefore any fintech, being able to measure your emissions, but critically looking at scope 3. So what are the emissions of your customers? What are the emissions of your supply chain? That may be a lot easier for fintech than a major supermarket, but I think it's still a challenge, and being able to then reduce emissions within your supply chain and your customers becomes quite critical. So if they sort of be prepared around that, so start measuring, because then I think you will increasingly, regulation will start requiring reductions, whether that's in, if you like, your financial portfolio, or one that you manage on behalf of your clients, in your supply chain, in your customers.
And actually, I mean, I wonder whether regulation will even be like the first place where fintechs start to feel this, particularly any companies who are looking to partner with or kind of provide services to larger financial institutions, right? Because I know I can say from Barclays that this is like a massive focus for us in terms of determining our carbon footprint and our environmental impact across our entire supply chain and our clients. So a natural extension of that is wanting to make sure that the fintechs that we partner with understand their impact and are also kind of prioritizing this. And so I wonder whether actually some of the more sort of proactive big corporates and institutions might even get there before the regulation does.
Yeah, absolutely. And also remember that some of the disclosure rules are coming in now for large financial institutions. The FCA is introducing them before 2025, when it hits sort of listed companies. But at precisely that point, that whilst you might think, oh, it's only the large institutions that have got to report on emissions, they've got to report on their supply chain. So if you're a fintech in that supply chain, you're going to become part of that process. And I mean, a way of looking at it is they need help. So it's also like worth talking to your customers, your clients, financial institutions, about what are they struggling with. If you like, the solutions are going to come from diverse sources, and particularly if you're providing regtech or fintech services, payment services, you probably have the capability to help those customers with their disclosure.
Yeah, and so I mean, it's obvious that this is going to impact fintechs in a number of ways, but I mean, from your seat in Innovate Finance and your other kind of engagement across the industry, do you think fintechs are being kind of adequately engaged in this sort of process and consultation to ensure that what's coming down the line, it isn't going to be too onerous and will actually be fit for purpose for a kind of high growth scaling tech sector where, you know, everybody's kind of, you know, they don't have the resource to be able to hire their own sort of sustainability manager within their company? Like, what are you kind of seeing is happening to engage the fintech sector on this?
I think you're right that a lot of the discussion, and kind of understandably because they're trying to hit the numbers, but the regulators and government have focused on the large institutions, and I think there's been a lot less engagement with startups, with scale ups. There are some great initiatives out there, maybe more around preparing for net zero and indeed making commitments around that. So, you know, people like Starling on Fido, Wise, Revolut came together with Tech Nation and others to found Tech Zero. It covers tech as a whole, but it's a big fintech piece. Monzo and Oak North have joined as well. So they've all made commitments to measure scope 1 and 3 emissions with a rapid reduction of those to net zero. I think those with more than 250 employees have made the commitment to hit net zero within a year. So some really
punchy.
Exactly, yeah, you know, tough targets there and kind of support around that. But I think we just need to do a heck of a lot more with the fintech community. And then, as I say, particularly then teasing through, well, where are the opportunities? How does this hit your clients in the broader financial services ecosystem, and how can you help? I think there's things are starting. So something I'm involved in on the advisory panel is the FCA and City of London Digital Sandbox. The next sandbox kind of tech sprint this autumn is specifically going to be on climate challenges. So looking at ways in which fintech can solve some of the issues. Your RISE report, I think, was really fantastic in probably for the first time pulling together all the strands of how fintech can tackle climate change and what it means. And then at Innovate Finance, we're going to be doing more, I think, particularly looking at how we help our members navigate through this. But I think, as you say, that there is a lot more to do, making people realize the change, the scale of the challenge, but also some of this is quite simple to tackle, and there's huge business opportunities if you start anticipating them now.
Yeah. So actually, yeah, let's switch gear a little bit and talk about some of those opportunities then. So I think one where fintech has probably really been on the front foot is actually around data. And there's a lot of discussion around how data is a enabler for kind of climate fintech that we covered in our report from RISE. And I think that there is more data available now than there ever has been before, albeit, you know, still got the difficulties around like consistency and reliability that need to be kind of solved. And we've seen quite a lot of M&A in this space already, right? With Morningstar have bought Sustainalytics. I think Bain have bought another company, MSCI bought Carbon Delta. So lots of kind of development there. But I guess my kind of observation is that perhaps as a sector, we're doing pretty well at like collecting the data and using it from a risk perspective. But perhaps the harder piece is that is still pretty challenging is really measuring the impact that kind of making these sustainable changes or like carbon offsetting is really kind of having, and that's a risk, because if you can't rely on that that kind of impact data, then particularly from a product perspective, is going to impact the kind of trust in the product and the rate of adoption, I think. So I just wondered if you had any thoughts on that. Maybe perhaps we could start with like carbon offsetting. That's often a popular topic.
Yeah, I mean, firstly, this absolutely is going to be driven by data, and as you say, there is loads there. I look back to when I used to do carbon footprinting at Tesco, again, sort of 15 years ago. It would take us ages just to footprint one product. Now, there's people like CO2 Analytics who just apply AI, plug it into your procurement system, and hey presto, you know what the footprint is of your supply chain. So that combination of data and AI is just going to drive this stuff. And actually, your point about complexity really brings down the cost and the difficulty. And I think there's still work to be done on data. Gavin Stark's Icebreaker 1 is doing some fantastic work around looking at kind of then specifically what data sets do we need in financial services and elsewhere to really have meaningful measures. And I think that's then where you get into, I think, impact. So, looking at impact as well as just raw data becomes really important. And your point about offsets is a good example. A lot of net zero targets at the moment are possibly based around carbon offsets. So, the idea of reducing through, whether it's, I see some great products around growing trees and planting trees. But again, that's not going to get us to halving emissions by 2030. So I think, they are part of the solution. And more, we'll see more technical carbon capture and storage around offsets. It's going to be important, but companies shouldn't rely on that. And therefore, I think, again, data needs to distinguish between offsets and emissions reductions.
And I think that's an interesting point as well, because also I think we see a lot of the kind of green products that are out there, particularly, bonds, the kind of corporate lending and things like that, that they're really focused on sort of funding sustainable activities, but potentially there's a bit of a gap for all of those companies that are on their journey to get there and don't already have that project or that capability that is eligible for the quote unquote green product.
Yeah, absolutely. And that's the risk, whether it's through disinvestment or just prioritizing investment in green products. Where does that leave shipping? Where does that leave aviation? Things like that are major parts of our economy. They're not just going to stop, but there isn't a carbon neutral solution out there at the moment. What there is a pathway between now and 2040, 2050 to get those industries to net zero. And hopefully that will accelerate. But I think therefore we need a more sophisticated way of measuring the commitments from industries to a pathway to net zero, kind of robust independent verification that they're on that pathway and taking it seriously, but recognizing that we can't just disinvest, but we need to incentivize and accelerate the kind of the technology that kind of doesn't exist at the moment, but they're going to need. There's some really good examples in insurance where Willis Towers Watson's developed with Volans, the independent sustainability consultants, kind of a climate transition pathways product where if the client signs up to a clear pathway to net zero, then they can provide insurance, but it's verified independently. So you've got sort of carrot and stick there, but also then an independent verification that industry can show the rest of the world and show investors, look, we're absolutely doing the most that we can, but it's going to take a few years.
Yeah, fascinating. I guess that sounds like still a very ripe opportunity for any fintechs out there looking to sort of make an impact in this space, to really get thinking caps on and figure out some solutions.
Yeah, absolutely. Ways in which maybe AI and actually also looking at maybe blockchain of, that sort of having verifiable, reliable, independent data to check on some of this, I think will become critical.
I guess that brings me on to another kind of quick topic then, because you mentioned technology, and one of the other kind of issues out there at the moment is actually just like the energy intensity of some of these technologies, cloud, AI, different specific, not all types of blockchains, so what would your kind of advice be and your counsel to fintechs around how they should be thinking about their use of these emerging technologies going forward from a sustainability lens?
Yeah, well, it won't take too long if the industries can grasp this, that sort of we're tagged as dirty industries like coal mining, crypto coin mining becomes similar. It's back to, you can't just rely on using renewable energy and carbon offsets. We've got to look at alternatives that use less power. I think what's really encouraging is, say, Ethereum, working on a proof of stake system to replace the energy intensive proof of work for crypto coins. We need sort of similar approaches across the board. I think crypto is maybe the big example, but across the piece, how do we develop solutions that are less energy intensive? And again, thinking about the energy that our customers use as well as just within the business.
Yeah. So to wrap up, because we're nearly out of time, obviously the UN Climate Change Conference is in Glasgow this November, so COP26. Hoping for lots of kind of exciting news and decisions and kind of policy direction to come from that. But I guess in parallel, Innovate Finance are doing quite a bit in this space. So and very busy advocating for and kind of supporting climate fintech. So I guess over to you. What should our audience be looking out for from Innovate Finance, and how can they get involved over the next kind of few months?
Well, so COP26 is obviously about governments coming together and agreeing targets. So in parallel, what industry, what financial services do is really important. People like the UN are leading on some of that. We're keen at Innovate Finance to really take the lead around fintech. I think a number of areas, it's sort of championing what our members, fintechs, are already doing and able to do. Challenging as we have around our own carbon footprint. I think critically connecting fintechs with the larger financial institutions. As I say, everyone needs help, and we've got to collaborate to come up with some of those solutions. And then I think also we'll be campaigning the Khalifa review called for globally accepted standards on measurement of carbon emissions and pathways in financial systems, which will then enable fintech to do even more if we've got global standards of data. So I think we'll be really pushing for that Khalifa review recommendation in the run up to COP26. Equally, we've got a Fintech for Good conference in October where we really hope to exchange ideas and practical sessions around what fintech can do. So yeah, it's a big agenda for us. We're sort of passionate about the ability of fintech to solve these challenges. I'm really keen for as many people to get involved. So if you're not a member of Innovate Finance, this might be another reason to do so. I'm really keen to know what other people are doing and also where you need help.
Fantastic. Well, Adam, thank you so much. I've really enjoyed talking to you this morning. I hope our audience have as well. So yeah, let's leave it there, but thanks very much for your time.
Thank you, Charlotte.